Good day, inderesTV viewers. Let's talk about Sampo's third quarter 25 results with CFO Knut Arne Alsaker. Knut, congrats for excellent results.
Thank you very much.
As usual, I'd like to ask, why did you not change the lower end of your full year guidance? Because the first 9 months of the year has been so good, so why didn't you raise up the guidance, the lower end, I mean?
Well, it is a good guidance still, I should remind you about, because even if we sort of end up in the lower end of that guidance, it still means an 8% underwriting profit growth year over year in the fourth quarter. And even though the guidance indicate that we could have even higher ambition, 8% is roughly in line with our new EPS target. But the main reason for us not changing the guidance in either end was the storm called Amy, which primarily hit Norway a few weeks ago, which is included in the forecast, the estimates that we have for the full year in the fourth quarter, which has a estimated cost for us to the tune of 30 to 40 million euros. And that is the main reason why we didn't do like you suggest now with the outlook in the report we released today.
So we'll see how the weather pans out in financial terms.
Weather is always in the fourth quarter during the winter always is a factor that can create some impact on Nordic P&C insurers' profitability. Now we have had a reasonably sized storm. We have included it in the outlook. We still remain with the same outlook, and it is an outlook that clearly indicates a year-over-year underwriting profit growth also in the fourth quarter, despite the weather.
Exactly. I think you were quite bullish when you raised the EPS growth target for the years 24 and till 26 from 7% to 9%, especially considering that Sampo does a lot of buybacks, and when you're targeting earnings per share growth, that might create an incentive to buy back shares, even though it would not be in the best interest of shareholders, just to, boost your results. So what's your thoughts on that?
Let's see where to start. First of all, buybacks has nothing to do with the fact that we increased our target from above 7% to above 9% for the period 24 to 26. There's two reasons for that. Obviously, like I just said, it is a target for the 3 years, 24 to 26, and we've had excellent performance, way above 7% operating EPS growth for the first 7 quarters of these 3 years. So just to take that into account means that it made sense for us to consider the target. And then it also gives us a good comfort in terms of next year and the fourth quarter, which we just talked about, which will be also taken into account when considering the upgrade of the targets. The buybacks that we currently are doing are really no different than the original assumptions we had for buybacks when we gave the above 7% operating EPS growth target back at the CMD in March 24.
Why don't you then guide investors about, let's say, operating earnings, but something not related to earnings per share?
Well, I think that is, earnings per share is after all important, because that will not only sort of be impacted by buybacks, but certainly also say something about how much dividend in nominal euros we can pay. I think it was also important for us to talk about an earnings per share in connection with when we issued shares, not only bought back shares, but issued shares in connection with Top Denmark, to show that transaction actually would be accretive for our shareholders and our earnings per share when we realize the synergies out of that transaction. And obviously, with the increased synergies we announced a few months ago, that earnings EPS accretion will be even higher compared to our original announcement.
Fair enough. Then there was very interesting change in the tone of the CEO report, the first report Morten had written. He talked that Sampo is the biggest P&C player in the Nordics, but it's not number one in either of its main markets, number 2 or 3 or something like that, and that could create an interesting situation to try to be in the number one. And I think the tone is a lot more aggressive compared to historical Sampo, where you have put more emphasis on profitability rather than growth. And it's like in the past, it's been okay to lose market shares for many years in a row, even though now Sampo has gained market share for the last year. So what's behind this change?
Well, first of all, you shouldn't consider that reflection which was done, that we have a very specific target to be number one in all the markets we operate in. That's really not a target we go to work thinking about. It's an illustration of the fact that, hey, we can continue to grow because there are companies that are, after all, bigger than us. So there are opportunities to grow and win market shares from these bigger companies. But to be number one in all markets, it's not one of our targets.
So it's more like aspiration, or?
It's an aspiration to grow, and there are opportunities because there are companies that are bigger than us that we can win market shares from. But in terms of aggressiveness, we're not. I wouldn't say that we are aggressive, but if you think about the history of our P&C operations, we were established even before Sampo came in with really bad margins, loss-making margins, and then we've had a 2-decade journey to land where we currently are, which are excellent margins. So to grow today creates a lot more value for our shareholders than if we talked about growing 20 years ago, or even 10 years ago, or even 5 years ago. So the value we create of organic growth, getting new customers into the company, is high. And the pricing discipline that we have in the main markets we operate in is good. So we get profitable business out of growing. Now, if that were to change and markets were to soften, which you, for example, see within the sort of global industrial and reinsurance segments, our growth appetite would go down, because we need to make sure that we protect our margins and not thinking about being number one in any market or being aggressive in terms of growth. But the large part of our business, the Nordic mass market business, for example, the SME business in the Nordics, broadly based, all markets, all countries, excellent value to be created out of growing. And of course, we have a history out of being present in the UK market the last 5 years, which obviously shows the value of organic growth as well, given the contribution that the UK today is making to Sampo's overall profitability compared to 5 years ago.
Do you see that? I agree, of course, it would create more value, ceteris paribus, if nothing changes, but do you think that all your competitors will just stand, in Finnish we say, tumput suorina, meaning that doing nothing, they are just in shock, and now Sampo takes all our market, well, let that happen. Usually they will answer to that by lowering prices, and then you could even break what the previous CEO, Torbjörn Magnusson, I love the expression rational market or rational pricing in the market. That could break up. What do you think?
I definitely don't think that competitors will store in awe and just look at us. They've never done that, and they will never do that. One thing is pricing. In the UK, for example, that's super important for growth. So if you don't want to grow, you just need to offer a less competitive price, so to speak. That has a very close link to growth in the UK. In the Nordics, price is one. But given the high retention we have in the Nordics, the fact that customers actually like us stay with us, to make sure that that continues to be super high at close to 90% is important, because that means that you lose few customers. And then customers learn that the service we have, the ease of dealing with us, the ease of buying our products, the ease of dealing with us when there's claims, that's also super important, very highly valued amongst Nordic P&C companies. So to grow, we focus more on the customers in the Nordics than what our competitors are doing, because we need to be the best in customer service, in terms of customer satisfaction, and dealing with that in an efficient and customer-friendly way.
So correct me if I've understood wrong, but if I understood correct, Sampo is still profitability first company, but now you see a historic opportunity to gain more market share without rocking the boat in the insurance market.
Absolutely, profitability first. I mean, to grow and deteriorating our profitability would not be a good value proposition for our shareholders. But the value we can create today out of the organic growth we're talking about is really, really high, and higher than it has been sort of during the history of Sampo P&C.
Thanks, Knut, for interesting answers. And I think next interview will be with Morten, and you will lead Sampo in the next year. So I want to thank you for our interviews. It's been a pleasure.
Thank you. Thank you to you as well.
Thank you.
Oh.